The U.S. Market Update with Money FM 89.3.
Good morning, folks. Here's a look at how markets wrapped up on Wall Street. So no surprise, it was deep in the red. So the Dow fell by over 1,030 points, or 2.6% lower, to close at 38,703. The Nasdaq Composite was the biggest loser, dropping 3.4% to 16,200 points. And we have the S&P 500 dropping 3% to 5,186. The Dow and S&P 500 had their biggest daily loss since September 2022. And also, we had the Japanese stock market posting its worst drop since 1987, down more than 12%. So lots to talk about when it comes to the sell-off in the markets. And of course, this is off the back of some worrying signs about the health of the U.S. economy. For more insights, we are joined by Michelle Schneider, Chief Strategist at marketgauge Group. Michelle, thanks for joining us today as usual.
Good morning to you, Ryan.
Good morning, Michelle. Great to have you back. So we do have a lot to unpack here. So let's start with perhaps how concerned you are right now looking at the red you're seeing across the screen. In many places, it's not just stocks, it's crypto. You've got a lot of panic almost in the markets.
Yes, and we could definitely concern, of course, and yet not completely surprised. So we could go through a myriad of balls that have been juggling in the air, any of which could have dropped and created this. Let's start, obviously, with the fact that we're in earnings season, and even though some of the tech companies reported well, they don't have unbelievable projections going to the fourth quarter, mainly because expenses for those companies are going up. So that was disheartening. We had a lot of earnings that weren't so great also, which did not necessarily help. Then we had, obviously, the geopolitical situation, which continues to be a ball that's bouncing, given the Middle East and people not really knowing how far it will escalate with Iran. And I'm going to make my way to the crux. Then, of course, we've had softening data in the United States already. It hasn't been recessionary type data, but it has shown that the economy is slowing, or a better word might be stagnating. And while we've had inflation come down, it hasn't necessarily come down in many places that people want to see it come down. There's still high gas prices, and there's still a lot of high food prices and services, insurance, and things like that. So all of this has been bouncing around the market. Then you had sort of the pinnacle. And a couple of weeks before the Fed meeting last week, the long bonds started to rally, which means the yield started to drop, and that performance of the long bonds started to outperform the S&P 500, and that's a classic risk-off. We did not know whether or not people were going into the long bonds out of something good, like, oh, yay, they're finally going to lower the rates, or something more insidious, flight to safety. And I think once Powell spoke last week, it was more of, people heard both, the dovish and the hawkish, didn't know what to make of it, but essentially the same night you had Japan that I heard you mention in the top of the show. And I think when you add all of that together, the dollar falling, now seemingly like the Fed might have been too late in lowering rates, and now if they do, it's not necessarily a good thing, but more of a scary thing. And then jobs report comes out Friday, and that shows an increase in unemployment, and whammo, everything just goes to crazy, and people just start piling into the sell side of things. And that's where we're at right now. So we'll see what happens from here, but the Fed is saying now, well, that's just one stat, one economic stat. You can't base a whole monetary policy on that. But it does look a little bit risky right now.
Yeah, Michelle,
good,
a great overview. Almost looks like a perfect storm of reasons coming together. And of course, the market's been on a bit of a good run. So it would have been a perfect excuse to take profit for some folks. And I think that's what happened as well. So for people trying to navigate where to go from here, how do you approach the markets right now? Is this the time to reduce exposure or even buy on dips right now?
Well, Warren Buffett certainly reduced exposure, not that he has been the pinnacle trader forever. I mean, obviously he's a billionaire, but a lot of the money, he has underperformed the market for quite some time. But nonetheless, worthy to pay attention to that he got out of a lot of his Apple stock, half of it, and he got out of a lot of his Bank of America stocks as he was seeing this. So it's pretty clear. I mean, I think that every single major sell-off winds up with opportunity. The question is timing. Let me give you a couple of hints, I think, that this is what I would be looking for. Number one is the S&P 500. I mean, breaking down under 5,400 was pivotal. And clearly now people will be watching 5,000 and then 4,800. So I think that's one thing. You got to watch what the SPY does. You've got to watch what the tech sector does. And we like to look at the semiconductors. It landed on major support today. So we could take Monday's lows in semiconductors, in small caps, in the retail sectors, and in transportation, which, by the way, was weak this entire year. And we could take these lows today. And if they hold and we don't see more of a flight to safety, let's say, in the long bonds, then you might want to start nibbling on things. But you have to make sure you know your time frame. If they fail from here, I would sit it out. I would look at the safety plays like the bonds, like the gold, and then I would have my shopping list, if you will.
Yeah, it's going to be quite a shopping list because things have been going down, so you might be spot for choice. And talking about choices, you've got energy and oil on your radar as well. I'm looking at those prices. They've been drifting lower, partly because of the global outlook becoming dimmer. There's been more talk about a potential recession based on some of the stuff we've been talking about. Why are you optimistic about this sector right now?
Well, I don't know if I would use the word optimism, but I do have to respect the fact that, first of all, gas prices in this country actually shot up. And if you look at UGA, which is the gas ETF, that was green today, even with crude oil being down. And it wound up closing unchanged. So there's been a lot of forced selling in anticipation of a recession. But I wouldn't necessarily dismiss the idea of a stagflation, and particularly when we've got some weather issues coming in. It is hurricane season. Now, that's short-lived. But I still maintain that we don't know what's going to happen with the Middle East, and that could have a direct impact to oil. So I don't know if I would run in, but I would keep my eye on it, especially around the $73 to $75 a barrel that has been classic support now for over a year. Low risk, I think, would be better than saying optimistic.
Okay, I suppose all things relative. Those will be some of the things to look at. And of course, looking at crypto, that's been also selling off. What do you take away from the sell-off right now? Is this a good time to look at crypto, especially when you see how there's been more adoption with ETFs becoming mainstream and I suppose more people looking at it as option in their portfolio?
Well, yes. All right. Well, it became a bit of a political football, by the way, which is why we did see a rally before the sell-off in Bitcoin, because all of a sudden candidates were talking about going to the conference and using Bitcoin more and more as a way to pay off debt. So you're forgetting about the fact that it got that spike from some political banter. If we're just looking at it, yes, it typically after a halving like we had this year in April, we do not see Bitcoin start to make a move until about September or October. So I'm looking at this now more of a noise factor and with interest on where we thought finally see support. Is that breakdown we had briefly under 50,000 an aberration, or are we going to break 50,000 if we hold 50,000 for whole long? And then as we get through this down cycle, we're seeing that Bitcoin is not a flight to safety at all. If anything, it's experiencing the same risk as NASDAQ right now. So we have to really see if it makes any kind of departure from that or if the market settles down. But yes, long-term view on Bitcoin, all the big institutional holders of Bitcoin did not liquidate on this move down. They are holding, so that kind of tells you something.
All right, definitely a lot to look forward to in the coming days. Markets on sell-off mode for now. We've been in conversation with Michelle Schneider. She is the Chief Strategist for MarketGauge Group. Michelle, thank you so much for your time and insights as always. Hope to catch up with you again soon.
Definitely, Ryan. Thank you so much. You have a wonderful day.
You too. Talk to you again soon, Michelle. Stay Money FM 89.3.